Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is the morning Forex report for the day of September 14th, 2022. We just had PPI data, which came in similar to what we saw in the CPI data, but the market reaction is a little more muted today. Let's talk about it. The US PPI came in for month-on-month minus 0.1%. That was as expected, which was a little bit better than the CPI data, which rose 0.1%. The core ex-food and energy, however, rose by 0.4%. That was a little bit higher than the 0.3%. I guess the market is taking a little bit of a breather from yesterday's sharp rise in the US dollar on the back of the higher than expected PPI, and although the ex-food and energy was higher today, the headline number came down or was as expected. The ex-food and energy year on year, however, rose by 7.3% versus 7.1%. That was still down from 7.6%, but we're still talking about 7.3%. So we have to be cognizant of that. The final demand year on year for the headline number 8.7% versus 9.8. That's a big jump to the downside there, or fall to the downside, but it's still 8.7%. So a little breather in the US dollar as a result. Taking a look at the euro versus US dollar here, we are trading right at the 200-hour moving average. And that's right near the parity level as well, at 0.99996 today. The price action today saw the market initially move in the Asian session down toward our target at 99.15, 0.9951, I should say, not 15, 551. That level, if you recall, goes back to this July low here. This is the July 14th low, which came in at 0.99515, and our low price today reached 0.99547. I spoke about that target in some of my posts yesterday, and indeed we did find support buyers against that level, despite the fact that it traded sort of above and below that level in a lot of days right here. Nevertheless, the market remembers those levels, and we saw it bounce back to the upside here. That move to the upside went initially to the 200-hour moving average, came back down toward our lows, before rotating back up to another swing area that I've had marked on my chart, also near the 50% retracement of the move up from last week's move to the upside. Here, this swing area, you can see it's defined by swing low, swing low, swing high, swing high. Then we moved above it and used it as a support, and then back down below it, resistance. Some up and down price action around the level here, and then we reestablished the level as resistance here, moved above it and used it as support. And in trading yesterday, we fell sharply lower, as you can see, and raced through that level, and now coming back up to it. So makes sense that the sellers leaned against this level, and the market has come back down. So now we've defined our range with the swing high up here and the 0.99515 level on the downside. We'll see how that plays out. In between, we have the 200-hour moving average in between. Needless to say, U.S. rates will go up by probably about 75 basis points. Not probably, assured, by 75 basis points at next week's meeting. The market will be paying attention to things like the terminal rate from the Central Tendencies report. So that's going to be the next focus come next Wednesday as well. How far will the Fed go? Let's take a look at the dollar versus yen next. And this currency pair moved up to retest its high price from last week near the 145 level. 144.984 was the high. Today's high price moved up to 144.954 when the Bank of Japan was reported to be asking for rates from the market in anticipation of potentially intervening in that market, and that turned the buyers into sellers here, and we saw the price move back down to and through the 100-hour moving average. Been trading above and below that level here in trading, but above the 200-hour moving average of 142.575. Whenever the central bank comes in and threatens to intervene, there is a market reaction. Why? Because traders get fearful that they're going to come in with big size, look to, in this case, buy the yen, sell the dollar versus yen, or other currency pairs in relation to the yen, and push the yen back to the upside as a result. And that is a risk that traders face. So there may be the instance that we do have a top in place here. Obviously, they came in near the previous high. They want to put a lid on the pair at that level. We'll see how it all plays out, but there also is those traders out there think that intervention is temporary. They can't come in all the time. So there may be opportunities to buy dips and force the hand, if you will, see if they really come through on their threat. Watch the 200-hour moving average, 142.57 on the downside now, and the 100-hour moving average, although we're trading above and below it, it's saying that the market is unsure of which way it wants to go at this level. So some mixed signals here, but keep an eye on the 200-hour moving average on any dip. If we're able to stay above that level, we could define some trading range with the 100-hour moving average above, 200 moving average below, and wait for the next shove in that currency pair. The sterling versus US dollar, like the euro versus US dollar, moved down in the early Asian session, and did break below the September 1 low here. That was a low here and a high here, and then we fell below it here, a low here, fell below it here. So we traded above and below the level, but for some reason the 114.95 level attracted some buyers and sellers at various points, even though it traded above and below it. Today we moved below it and then moved back up. Moved above the 200-hour moving average, but stalled against the 50% retracement of the move up from the low to the high that we saw recently, and that kept the lid on the pair, moved back below the 200 and trading right around the 200-hour moving average as we speak. A move above the 200-hour moving average has the 50% and the 100-hour moving average on the top side. Also, this swing area, you can see the number of swing lows and highs through here that the market paid attention to, including on trading on Monday when we came down and tested that support here. Friday we had this highs right here. So this area right here between the 115.92 and 116.20 level will be a level to get to and through if the buyer would be a level to get to and through if the buyers are to push the price back to the upside for that currency pair. On the downside, we'll continue to watch movements below the 100-hour, 200-hour moving average with momentum, and keep an eye on the 114.95 level, just below the 115 level in that currency pair. So that about does it for the morning report. I'll take a look at some of the other currency pairs on our website as the morning progresses. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.